Hello, everybody. This is another podcast. We've broken 25 of Scale App Podcasts with myself, Dan Eisenberg. As you all know, this is a serious hobby for me to explore ventures all over the world, how they scale, especially beyond, and it's a fairly low bar for some as they scale beyond $5 million. It's sort of, that's the threshold. If you're not doing $5 million, you're still struggling to figure out what your product market fit is. And once you get it, then you really begin to scale. Anyway, that's one of the issues that we have explored many times. I'm really fortunate to have with me here Raphael, we'll call him Rafi Afaedor, who's one of my former students. And despite that fact, has gone on to do some really amazing things. Rafi, just say hi.
Hello, Dan. Thanks for having me here.
Oh, well, it's really great. I know you're busy, and I guess, spoiler alert, you're right now in the middle of a 1-year sabbatical, having founded 3 ventures at scale. This is really amazing in Africa, not the place that a lot of people around the world are looking to see scalable, especially technology ventures. And I think this is one of the issues that we're going to explore. You know, one person's bad market is another person's big opportunity. So
Exactly.
I'm not saying Africa's a bad market, but that's, I think, the perception in the past anyway has been that it's a very frightening in terms of complexity, in terms of lack of transparency. That's been the global perception of parts of Africa, I should say. So, Rafi, let's start off by you telling us who is Rafi Afaedor, and don't say anything about your 3 businesses.
Sure. Thanks for having me again, Dan. Yes, so I am from Ghana. I am a computer scientist, bachelor's and master's. I went to HBS 3 years after my graduation in computer science. I had worked in Monster.com as a product manager, so I moved quickly into senior product management, overseeing 18 countries across Europe before moving to Harvard Business School, where we met. And I spent the next 2 years in Harvard Business School learning about general management, entrepreneurship and everything. And the reason why I chose to go to Harvard Business School was really to be able to learn, to transition from being a technologist, a software engineer, who then moved into product management. But I thought with the tools that a business school will equip me with, I'll be in a well-placed position to now come back to the continent and build digital ventures. This is really what I wrote in my business school application essay. So I find it the case that that introspection that I did before going to business school was very useful, because I sort of allowed myself the latitude to figure out what I would enjoy to do with my career, and then I pursued it. So right after business school, I moved to Nigeria. Ended up spending 10 years in Nigeria.
1 second,
Country-
Rafi, 1 second. You skipped over one country that's a little bit unusual in a resume, the Czech Republic. Say something about that, and also the personal side of that.
Absolutely. So I'm from Ghana, but I got a scholarship to study, an academic scholarship to study in the Czech Republic. So that remains, if you will, my home too. So from 1996 to 2006, 10 years, I was in the Czech Republic, where I graduated bachelor's and master's in computer science and went on to work at Monster.com in Prague and in London, but overseeing 18 countries in Europe. I would find my life partner in the Czech Republic too, and we've been together since.
You have children?
2 children, yes, 2 children. Obviously have Ghanaian, have Czech. 14 and 11.
Great, that's wonderful. And you live in which country now?
We live in Nairobi now. So we lived for 10 years, from 2009 to 2019 in Nigeria. My wife joined me a year later. We got married a year later when I moved to Nigeria, and she joined me. And then, in 2019, we moved to Nairobi, Kenya, and we've been in Nairobi, Kenya since.
Great, that's wonderful. I think that personal touch, so to speak, really helps us understand the business side as well, and a dimension of the business side, because as I said before, you're now on a sabbatical. That's a personal decision. It's a professional decision as well. So now I'll let you talk about the business. Tell us about your three businesses, one after the other. One of them, of course, is publicly traded, but we'll get into that soon. Go ahead.
Sure. So when I moved back to Nigeria, when I moved to Nigeria in 2009, I wanted to learn how to the way I saw it was very simple. I can't want to be a Pan-African business person and be scared of Nigeria, right? So the only way you learn to swim, you don't tip into the water, you dive into the pool, right? And that's exactly what I did. I had an amazing 10 years in Nigeria, got very good mentors. The people I worked with, the first 2 years before leaving to start my own ventures, became my mentors and friends. I'm a very good bunch of people. But yeah, I mean, I had the opportunity to travel the length and breadth of the country because initially my job was to commercialize fertilizer. So essentially, I had to go with my boss to go sell the fertilizer. And so that's how I got to learn. I learned beyond business school how to actually get things done practically on the ground in the African context, right? So I tried to extrapolate from that to. I learned, for example, that the packaging, the size of the packaging makes a very big difference in your ability to get the African consumer to buy, because while we're selling fertilizer was being packaged in 50 kg bags, 50 kilogram bags, and I think. So my boss, the chief commercial officer, came up with this idea that we should explore smaller sizes. And so we broke it down to 25 kilograms, 10 kilograms, 5 kilograms, 2 kilograms, and 1 kilogram. And we found out whenever we went to the market, we were good. So the fertilizer was flying off the shelves, right? Even when we go to the market at 6 or 7 a.m., the market women, market men always had enough money to be able to pick up 1 kg of fertilizer. So the problem with sales I've come to find out in Africa is you have to almost sachetize the product into smaller SKUs so that people can actually afford them. If you sell 50 kg packs, people are not able to buy. So those are sort of the lessons that I learned. I learned a lot about leadership and just leading people, right? I mean, being at the forefront, being able to motivate people, being able to get them to do what you need them to do, and to do so willingly.
Give us a lesson. Give us an example of a lesson you learned about leadership.
Okay, so first thing I tell people is you can't be a leader if you don't have followers, right? So I mean, people have to decide that they're following you, and the formal authority you have on people means nothing, right? It just means that you sign their paycheck, right? But the real informal authority, which is what you should, if you're being a good leader, that's what you should be striving for. Is that when you're not in the room, when you've stopped being their boss, they should see you and still call you boss, and they should say it proudly. And if you set this yardstick for yourself, you interact with people in a way that sort of resonates with them, the way that actually speaks to them, because you're not reliant on your formal authority. You still lead them, but you lead them in a way that you would lead people who you don't have the formal authority of. And I find that to be significantly more powerful than if you lord yourself on them that I'm your boss and have the formal authority, so you have to do this. It's a slight paradigm shift, but it makes all the difference. And and so that's a big one because
excuse me for interrupting, but is that unusual in the context of the business culture in Nigeria or Western Africa?
I learned it there, so I won't necessarily say it was unusual because the company that I joined when I went to they actually recruited me from Harvard Business School and took me to Nigeria. It was the teams that I was part of, the commercial team and the operational team. This sort of dynamic played out there. Whether it's the same corporate culture in other places, no. But then later on, I would work with other people who did not manage exactly that way. So there are different styles, but I do find it really the case that managing this way has been super effective for me, and I preach it. And because it's the way that somebody managed me that worked for me, and I know that if I do unto other people what I will want people to do unto me, then I think I'm moving in the right direction, right? And it's been effective. So, for example, Dan, if you go on my LinkedIn, for example, you'll find ex-employees of mine still till today speak extremely highly of my leadership, etc. And it's just the simple thing of just treat the human being with dignity, right? Let the human being realize that, we're in this together. Yeah, I'm calling the shots, but I'm not lording over you, right? And so even for example, I have to override something you're doing, or when we have an impasse And I really now have to use my, if you will, veto power. I let you know that I use it reluctantly, but at a certain point, we have to keep moving, right? Or I have a better line of sight by virtue of my position. So I'm making this decision. So it's not democratic per se, but it's a way of letting you know that, yes, we all have our spheres of responsibility, and this is my responsibility to make a decision here. It just sort of works when people realize that you're not lording yourself over them. You're working collaboratively together. Another thing that I find that works for me is but define clearly the box within which a person can make decisions and allow the person to make decisions in that box, right? So if, for example, the goal is to achieve certain dispatch cost targets, I can chime in a bit and say, you cannot use this, you cannot use that. Outside that, you're free. So if you want to start I give you enough latitude to feel like you're able to make your decisions. And I listen, right? And sometimes I'll listen and change even the sphere for you. And the other times I'll tell you, we're actually constrained. So we need to do it within this. Beyond that, you can actually make decisions. So I learned all of these while I was working in Nigeria. And really, I've carried it with me for the rest of my career, and it's worked for me.
So let's fast forward now to Jumia and where that came from, it's a publicly traded company listed on the New York Stock Exchange, so we know a lot about it. Let's focus on the things that you've learned about scaling that business, and Jumia has had ups and downs as well. It seems, just from looking at the publicly available information, and it looks to be to some extent turning itself around as well, right about now. Anyway, tell us about the early journey of Jumia and how that got started in such a way that it's scaled.
Yeah. So yeah, it's a lot. So starting points, right? So when I moved to Nigeria in 2009, I remember I told you, even writing my essays for business school, I stated very clearly, I wanted to come back to the continent of Africa to build digital businesses, because I did quite a lot of introspection to be able to position myself amongst the many other equally talented people, equally smart and equally qualified people. I always feel like for everybody who gets into Harvard Business School, there are another 9 people who are equally placed to enter the school, and so for that to happen, you have to sort of dig deeper to be able to find that part of the story that you can tell that puts you a little bit ahead of the next person. So I did that. I spent 3 months introspecting, and it became the foundation of the last X number of years of my career, because I knew very clearly what would work for me, and I managed to articulate it into the essays. And luckily, Harvard Business School saw the authenticity in it, but it influenced my career from there. So when I spent the 2 years in the company I just talked about, I left after 2 years to start my first company. Those were the days of group buying and couponing, so Groupon, right? So I started the first Groupon type company in Nigeria out of my own pocket and built it for a year. Because I could see on the streets of Nigeria, the cars that people were driving, the ability to afford that, the circles within which I was moving in, the sheer size of the country. So I was convinced that one could actually build e-commerce. But I did not have the experience to go into logistics, nor inventory holding, right? So I chose the couponing business and started that. So that was the first business I built. So after building that for a while, and the numbers I was getting were growing. Obviously, just a one-man business with just a few salespeople working with me, because I was building out of pocket. I reached out to the guys of Rocket Internet, and the reason why I chose Rocket Internet was because they had the experience building e-commerce, and they were busy building e-commerce around the globe. So they sort of tied it. They hadn't thought about Africa, because again, remember, this is 2011. Right, Africa was really on the back burner for most people. So they were busy building Latin America, Southeast Asia, and Europe, etc. But I reached out to them to say, look, here is a market, and I have data to prove that we can be a viable business. So why don't we go into this together, you invest? So that's how.
Let me just say a word about Rocket. Rocket was anyway based in Germany or in Europe, and it was 3 brothers who would basically in those days take business models that had scaled primarily in the United States and apply them in other places. That was one of their business models anyway. So this is it was a very significant venture, let's say incubator, if you will. with a lot of strong financial backing. So I think that's important to mention. These are people with a lot of global savvy in building internet businesses.
Absolutely. Absolutely. So, so I reached out to them because it was very clear to me that at that level, with the experience I'd had up until that point in time, I simply did not, and in a very out of, this is Africa, right? Building e-commerce as the first person, if you will, at scale in Africa, and not necessarily being the most experienced person. I was just barely 3 years out of business school. I just didn't fancy myself, right? So I reached out to people who had the experience, etc., and they could mobilize the funds, and then that's how we actually started the Jumia story. So so Rocket Internet got back to me, and then in 2012 I started Jumia. Then Tunde came in there, who was is also an alumnus of HBS by a class of 2011. I reached out to the HBS network to tell people that, look, I'm about to start what potentially will become the largest, the Amazon of Africa, as I used to call it. So if there are any people who are interested to come, they should reach out. So Tunde came and reached out. And within 8, I interviewed him, interviewed my co-founder. And what made me cross the line with him, take over the line with him, is when I asked him, how quickly can you get from New York to Lagos for us to continue to start building? And he was like, look, I can be there in 1 week. And so 1 week after the interview, he packed everything and he was in Lagos with me to start building, right? So that's the beginning of the Jumia story. Rocket Internet also supplied us a lot of support, right? A lot of support, team support, etc. Because it was new, right? So even things like digital marketing did not exist. Google will go on a year or two later to spend a lot of money educating digital marketers, right? But as we were starting Jumia, there was no such real talent, at least not at any decent skill. So we got a lot of people from Europe to come join us, to help us, almost like intern types, be there for a while and leave kind of thing, but help bring the skills that we needed to educate the locals, etc., who then took it on later. So how do we scale Jumia? In retrospect, a lot of mistakes were made, but we didn't know any better.
An example of a mistake.
Example. So when we build, I call it 2 in a box, but in the case of Jumia multiple, that we became 4 co-CEOs, because apart from Tunde, Rocket Internet reached out again and said, okay, we still think you need more, talented people. So they sent us Jeremy and Sasha. So 6 months in, Jeremy and Sasha, who then stayed on as co-CEOs after Tunde and I decided to leave, so the 4 of us became co-CEOs. And when you have this kind of course, essentially what you do is you split the company into departments, and each CEO owns like maybe 2-3 departments, right? Marketing department, operations, and customer experience were all under me, alongside people department, etc. Jeremy and Sasha were more related to investor relations because they lived in Paris and they'll be, going for fundraising, etc. meetings with investors. While Tunde and I built a business from the bottom up. Now, some of the mistakes we made, I, for example, know now, but I could perceive it, but I could not articulate it as well as I do now, that e-commerce is at top of the pyramid proposition, right? I started off with the little experience I had and what I had seen in Lagos, assuming that we had a market of about 200 million people, and we will find a way to reach them because most of them will have a mobile device of different quality, but we'll be able to find a way to reach them. But what I missed out then was the fact that we needed people to go online, whip out actually place an order and wait a couple of days for the items to reach them. You know what I mean? It wasn't same day delivery. It turns out the majority of Africans actually live, if you will, from hand to mouth, right? And so they don't have that time to wait for something to reach them. You know what I mean? This is a very, you can layer on top of that, paying online. So for paying online, we mitigated that by actually putting in place pay on delivery. It came with its challenges, but it was necessary to, and then you're also talking of a world where people are not accustomed. Customer service in Africa works differently. It's not your classic Amazon, send an email, call a call center customer service. It's a customer service of, I bought this shoe from you. Right, I took the shoe home. It's not what I thought it was going to be. I bring it back, just community, right? Face to face, you replace the item. Maybe, you know what I mean, that kind of thing. But it's not the interaction via a computer or a phone or something like that. So now when you're trying to teach somebody who's accustomed to walk into the shop to discuss with the shop owner, and frankly, customer service does work in Africa. It just works the African way. There are many instances where the shop owner will extend credit to the customer. So a customer can come and say, let's say a lady can come and say, look, I have this event I want to go to. I want to buy this dress. She says, okay, the dress is going to cost you, I don't know, let me just toss some numbers, the $50. But yeah, I've saved $30. So I'll give you $30 and the last 20 I'll pay over the next 2 months, right? $10 every month. These things do work in Africa, but they don't work the Western way of formal credit has been extended. It works more in terms of I walk to you, we have a conversation, and I'll honor my promise.
How did you translate this into an e-commerce digital business?
Exactly. Therein lay some of the challenges that Jumia ran into, because essentially we were coming into a world that had its own dynamics with a totally different proposition. So when I advise the new generation of entrepreneurs, I tell them it's much easier to work with what actually pertains than to try and change customer behavior. That's probably the most difficult thing you can try to do, to change the customer, right?
So how'd that translate into what you did at Jumia early on?
Yeah, so what then happened was we plateaued in Jumia, right? We plateaued because there is a sliver of the market, which is the upper side of the socioeconomic pyramid, who get it, who travel abroad, who get things like e-commerce. Those ones just came very quickly. So we grew very, very quickly. But being the one in charge of growth and marketing, I started perceiving a challenge because I could begin to realize that I'm spending money for growth, but I'm not getting the results. I could not articulate why, but I knew that we're running into headwinds, right? Now I can tell you exactly why, because I've had enough years and tried different things, and I know what exactly was happening then. The African consumer, the majority, simply won't go online to buy things and wait for a couple of days. The second thing to that, so you have to sort of figure out a model that will work for them. And that's why I built Kyosk later, because that model was a solution to some of the challenges I saw in Jumia. So in Kyosk, we just deliver goods to the mom and pop shop who does the last mile interaction with the customer. Kyosk grew hand over fist. Whereas with Jumia, we were trying to do last mile interaction in a virtual form with the customer, which the majority of customers simply cannot live with that. They want to walk to a place and see the person who sold them their rice.
Let's come back to Kyosk for a second, which is your third. We skipped over Supermart. That's okay for now. But Kyosk, so exactly what is the business? Can you explain that just a little bit more? It has to do with the actual delivery, interaction with the customer. That I think I got. Explain more.
So Kyosk, unlike Jumia, which was B2C, Kyosk was B2B to C, right? Where the second B is actually your local bodega, as you know, in the bodegas like corner stores. So essentially with Kyosk, what we're doing was we deal with the corner store, supply them stock, which they can sell on to. So almost think of it like a digital distribution / wholesale business, right? And the thinking there was the mom and pop shops had just a much better understanding of the communities that they existed in, understanding of the customers. So even things like they extend buy now, pay later services to their customers. You know what I mean? So our job
they invented that before it became a thing.
Way before it became a thing. Yeah. Way before it became a thing. And I like
Rafi, let me just reflect, because I worked in Japan for about 15 years. Mm-hmm. This reminds me a little bit, although it's a completely different economy and market, of what happened in Japan when online sales were starting up. They couldn't deliver to the homes. That was a big problem. And so they delivered via the 7-Elevens and family marts. There were the little stores that are ubiquitous. There are tens, maybe hundreds of thousands of these. So they were the deliverers. You could make orders from kiosks in those family marts and pick up your package there as well. Is that similar a little bit?
Absolutely, absolutely. So essentially, that is the direction we were going with Kyosk, right? Essentially, we would have to convert some of these mom and pop shops into last mile distribution points for online retailers. So e-commerce service centers for online retailers will be able to convert them into almost like agency bank branches. Potentially even KYC, etc., could be done by some of these. So there are many of them, and you over time have to sort of stratify them based on the size of their space, their capacity. You can now start layering other types of services onto them. So that dynamic,
For example, what other kinds of services do you layer onto it, or is it you layering on the services, or is it the mom and pop owner who's layering on the services?
We will facilitate it, right? So, for example, the mom and pop owner does buy now, pay later for some members of their community, but they also have a limited sort of limited stock. But if we come in and with their purchase history, we can easily bring on board a banking partner with a balance sheet, and then they use our platform to extend the loans. Some of the things direction I wanted to go with the company is also to bring to enable the purchase history of the customer to not be used to give them device asset bank loans, right? So they, for example, can buy a simple mobile phone. Once they pay off, now they qualify to be able to buy a computer. Once they pay that off, then they qualify to be able to buy a motorcycle. Once they pay, so essentially help them build credit history, because the mom and pop shop is in the community who is sort of de-risking it a bit. So the default rates will be lower, because the mom and pop shop is incentivized to ensure that one, the loan is granted, but two, the people pay back, then they make some money. So essentially, you become almost like having a lot of collection agents / quasi-bank branches in the communities by using technology to facilitate that. And the bank with the balance sheet sits on the back end, and we use mom and pop shop. So even things like insurance sales, you have regulation for agents and brokers. Again, we can be the agent, we can be the broker. The mom and pop shop is just a distribution point for us. You know what I mean? But we can interface and make sure the things that need to be done on the app are done so that we meet the regulatory needs of the regulator. But we're able to bring this service. Another example I can give you, Dan, is, so if you look at insurance premiums, there's many such examples, but let me just give this one. If you look at insurance premiums, let's say an insurance premium for the year is $200. Right? There are many people who simply cannot find $200. But if you break it down to $20 a month or $1 a day, $20 a month is $240. Now that's $40 of value that has been created that can be shared by us, the platform, and how do you call it? The insurer, and then also the financing partner.
The intermediaries.
Exactly. Even if you make it $1 a day, that's, let's say, 25-day month, that's $300 that you would have actually. Now, people can easily afford to insure themselves, their assets, education, medical, etc., for $1 a day, because they do find a way to make more than $1 a day, right? And so, but they find a way to make more than the excess of $20 for the month. They can find a way to pay it. But if you ask them to pay $200, they won't be able to.
So, just listening to the entire story, what it sounds to me is you're applying that lesson you learned with repackaging fertilizer, applying it in many different ways.
Exactly.
In order to sell it, you've got to repackage it. And in a lot of ways, that repackaging, it's not just selling that product more, but it opens up a lot of opportunities for you. What scale does Kyosk have today? And let's talk a little bit about the role of venture capital, because you raised a lot of capital and your partners raised a lot of capital for Jumia even before it went public, hundreds of millions of dollars, which is amazing. Have you learned from that we need lots of venture capital, or have you learned that we can be very lean on venture capital and build a business?
Sure. Yeah, with Jumia, we did raise. Jumia was at the height. So we started Jumia in 2012. So imagine the boom in investment was around that time, right? A lot of the today's biggest companies were all founded around that time. So we were able to raise significant sums of money, all the way through to the IPO, etc. The problem with Jumia was, it was clear to me that we were running into headwinds. I could not understand why. I could not quite articulate why. I actually started explaining it to the board, but I couldn't sort of get them to change course, to move in the new direction, because it meant slowing down growth, etc. So a lot of the challenges that Jumia would face later, were evident early on. But when I couldn't really explain it, I began to feel like maybe it's time for me to move on, which is what I ended up doing. With Kiosk, we also raised, but the difference with Kiosk, we did raise with corporate venture capital, right? So it's with a company called Export Trading Group, so the CVC in Export Trading Group, and Mitsui, the Japanese conglomerate.
Right. One of our clients and partners, Mitsui Busan. Yeah, we brought
Sure.
through.
Exactly. Oh yeah. Okay. Yeah. So that's the difference, and the reason why is I already started perceiving that, and I do remember we were in Berlin for an investor conference, and we had folk from Goldman Sachs, etc., various investors, and I remember what the guy from Goldman Sachs, I can't quite remember his name now, but I have it somewhere, said, "Look here, when you get in Africa, be careful as you're building businesses because capital will reach Africa last and it will dry out of Africa first." Right. And sort of that stuck in my mind. And so when I went on to build Kiosk, I was careful. I wanted, corporate venture capital who've bought into what we were doing and will be able to have, if you will, a bit more patience than a classic VC, who's, if you will, on a timeline. So that was helpful when funding dried up late 2021, early 2022. Our corporate VCs were able to stay the course with us. You ask, what was the size? Our peak were $250 million in ARR. ARR, I don't know. I left a couple of months ago, so I wouldn't know where exactly they are now.
But that's a rough idea of the scale. I want to come back to the corporate partners that you have. It sounds from their names, and I do know Mitsui, used to know it pretty intimately, that not only do they have financial resources, but I think they also have other kinds of logistics and informational and professional resources as well. Did that come to bear at all in building Kiosk?
The logistics, not as much, but a lot of introductions. How do I put it? They have a ton of experience doing things in Africa, and that's very helpful. So, unlike Jumia, where I felt I wouldn't say, there was, from the Jumia time, the support from Rocket Internet was more to do with what e-commerce is, what to think about globally. But the Africa part of things, we needed to figure out ourselves, right? Whereas with the corporate venture capitalists that I did Kiosk with, they understood Africa. So in that regard, they were helpful. The board was helpful. We could have conversations. They'll point you in the direction. Look here, pay attention here, pay attention there. It was very helpful in that regard. The challenge there was it wasn't exactly a corporate VC that understood technology startup very well. So that's the challenge. So on the one hand, it's almost like you marry one person and you leave the person and you go for the exact opposite. Yeah. Nobody's fully formed, right? So it's something like that. So the new guys lacked a deeper understanding of the technology startup specifically, and how things play out there. Whereas they had a strong understanding of Africa. Now, for example, say the earlier part, there was a time when obviously we're growing very hands over fist. We're growing, I think, within 5 months, we had gone from $0 to $1 million in monthly revenues, right? So super fast, and our processes were lagging behind. And so not too long after, there was a bit of theft in the company. And one thing, when I reached out to the board to say, look here, I think guys are stealing, because we're selling everyday essentials. You know what I mean? Rice, sugar. So and it's like liquid gold. You can take an Apple computer and you'll struggle to sell it. You will not struggle to sell a bag of maize or a bag of sugar or a gallon of oil. You're able to cash it out very, very quickly. So I reached out to the board and said, look here, I think guys are stealing. So I want to actually shut the business for this 2 days, because I'm trying to slow things down so I'm able to get the processes to come up. The board was very supportive. They were like, that's absolutely the right thing to do. You know what I mean? And the one thing they told me is, keep your eye open. Anybody you're seeing at the front line is not a big fish. There is a big fish facilitating this. Right. So so that kind of advice was invaluable. Mm-hmm. Right. I don't know if I would have gotten that kind of advice from the Rocket Internet guys, unless it's a global thing that something like that happens. It's there's a big fish facilitating it. But I think in an African context, if something like that is happening, best believe that somebody almost in the executive room is complicit. You know what I mean? So in my reward,
Did you find a big fish?
yes, I did.
Yeah.
Yes, I did.
It's tough to find. It's
Absolutely.
not a happy event.
It's not. And by the time you find these are people you have enormous respect because they're very, 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 very senior. You know what I mean? And we'd work very closely together. Literally, I can't name an hour around the 24-hour clock that we haven't spent on phone, working, right? But I woke up to that reality that that's where the whole thing was coming from. So I had to let go of the people and all of these things. But it was very helpful to me. Small advice, but big implications for you to know that if you just go cutting at the front lines, the rot is still in the company. You have to find who the big facilitator is. And it was a C-level executive who was facilitating this, right?
That's amazing.
And yeah, so in that regard, corporate VC helpful because they understand the business. Classic VC helpful because they understand technology investing, right? So then one just has to choose. In the end, I think I chose well because they had the patience. Nobody foresaw 2022 funding winter coming, but you know how your subconscious knows things and tells you, right? You're not able to articulate it, but the facts are there in front of you. You can only articulate them in retrospect. So I sort of perceived that at any point in time, funding can dry up in Africa, and sort of went the direction where if it ever dried up, we will be able to have, firepower because the people who were doing this with have the firepower and have bought into it. We're not just a portfolio company of them that they can move away from. So that's the learning from that.
I have to ask you, Rafi, you've entered and exited personally from 3 businesses. You've left. It's not only you had to make decisions about a partner who was cheating or stealing, but you've made also personal decisions to leave. What's that like?
It's so it's funny. I think one of the things I've learned about leadership is always try to do the right thing. Always try to do the right thing. I think Clay Christensen gave us enough examples of those back in Harvard Business School. He's written about it in his book. So I always try to do the right thing. So even if I have to let go of my direct subordinate, I lay the facts in front of them. And you've put me in this situation that I have to part ways. And I just call the facts for what it is. And frankly, if people have had to fire, I'm still friends with. You know what I mean? Because I try to, my MO is to look yourself in the mirror at the end of every day and know that you're not a bad human being. You're doing your job.
How's that translate into your personal decisions to leave? And why did you do it?
It's the same. It's kind of similar. How do I answer this question? It's the same thing, right? I have a very deep belief in my abilities, right? So I have to look at where I am. Is this in full alignment with where I want to go? Am I the right person to be leading this organization into what the board wants, where the board wants it to go? If I'm not fully aligned, then I just have honest conversations with myself and move on, because I work with heart and I tell people that I work for me. I don't even feel like I'm working because I'm working with my heart and I can keep pushing. So long as I'm not tired and I need to sleep, I can wake up and keep working and working and working. I just enjoy it. By the time there is no alignment in where we're going, then it becomes tedious and very painful. So at that point, I know I'm not in the right place, right? Then I have to have a conversation. So in the case of Jumia, for example, when we start moving in that direction, tossing more and more money at this market that it's supposed to be, we're trying to stoke demand in a place that demand isn't. You know what I mean? We needed to flip it and find the right supply to stoke the demand. The supply had to drive the demand because there are 1.4 billion people consuming on the continent, but they can't consume at the price point, and some of the items that we want them to consume, they can't consume. So it's my job to be able to articulate that. If I can't articulate that, then maybe it's my job to sort of step away. There is a saying that I like. I know it's called give war a chance. Sometimes, you have to sort of allow the war to play out, so we're clear who the winner is and who the loser is. Because if I'm there, I'm destroying value by slowing down the time it takes for the board to arrive at the decision that the course is not right, because I will be doing things to sort of, mitigate, ameliorate all of these things, right? But sometimes you just have to get out of the picture for them to say, this is not the direction we're headed in. With Jumia, it took, well, I guess some part of the proponent of the old way of doing things just left 2-3 years ago before Jeremy Dufresne came. Jeremy Dufresne came, and having been in the company long enough, and seen some of the things that were so what Jeremy Dufresne is doing now, quite a number of those things are the things I was looking the direction I wanted us to go in about 10 years ago.
But it had to play itself out. It had to sort of make the mistakes, learn. The organization, the board, everyone's the shareholders all had to learn.
What I didn't realize, though, is how much staying power an organization can have and continue doing, if you will, the wrong things for long. But I think Jumia is now on the right path, because it's not at a certain point, Jumia became like, aside from the outside looking in, just like tossing so many things against the wall to see which will stick. That is wrong, right? That is for me, that is a company where the founder, the one with the founding idea, is no longer there. So the people sort of building it are trying anything. I think Jeremy Dufresne has come in and owned it almost like a founder will, because now you own it. You almost have to treat the child like you're their biological father and say, look, this is the direction, right? Oftentimes when people come into this kind of environment, and we've seen this play out a lot, right? We've seen it even in the old Apple story. It was kind of similar. When Jobs comes back, he knows, look, we stop all of these things. This is what we focus all our energy, limited resources on. We can find growth here. If people who, I don't know. I think I've landed my point, right?
Yeah.
So,
I just wonder if you don't answer this question, but if you push the Jobs analogy a little bit further, it means that you may go back to Jumia someday and really build. And I'm not asking you to give an answer to that. I can see your face. I wish everyone could see it. You're shaking his head and laughing. Rafi, we have to keep these short, even though we could go on forever. This is really fascinating. But I want to end with just maybe a difficult question. You have 2 children. You told me that one's 14, one's 10. And fast forward, let's say 10 years, and the eldest and maybe even the youngest are saying, they want to follow in their father's footsteps, and they want to become entrepreneurs and build something of significance. What advice would you give, let's say, your children or your younger self, if you ran into your younger self?
Definitely much longer horizon than what's technology entrepreneurship around the world is really inspired and motivated by what we've seen play out in the Valley, Silicon Valley, and in the US. But somewhere implicit in that is there's this notion of build quickly. At a certain point, you exit, you make a ton of money. I would advise a younger me or my children to see this as the business you're building for the long haul, because it takes much longer than some of the time horizons we give ourselves. And make sure that when you're bringing partners on board, they understand that this is for the long haul. They might have different interests. I need to exit in 5 years, etc. But that should be accommodated within the context of a business that is building for, decades, right? Because if you look at the best businesses that have been built on the continent, the Dangotes, etc., these businesses were built in decades.
Yeah.
Right. So if I think the continent will reward anyone who's thinking longer term, and there are many, right? There are many family businesses. Their challenge is to be able to do succession into the next generation. But otherwise, the length of time they've built brings equity of its own, right? And yeah. So that
it sounds like there's a lesson in here also for investors that want to invest in and see opportunity in various places in Africa. I always hesitate to say Africa because it's not just one place. It's a huge, very, very diverse continent with different cultures, economies, and climates and everything else. But investors that want to do business in parts of Africa and make investments, it sounds like they should have a somewhat different strategy and somewhat different mindset
Yep.
in order to be successful at it.
Absolutely.
And that's what maybe what Rocket's mistake was. Also, their strength and their weakness was we're applying a business model from somewhere else, and we know that business model really, really well, and we're going to install that in Africa with you, of course, and your team. And that was good because they got the opportunity started, so to speak, with you. But then that also limited them and challenged the company. It sounds like they've recovered from that. But with a different attitude and a different strategy, it probably could work, and there's probably lots of opportunity there. So,
Absolutely.
Rafi, unfortunately, we're going to have to end now in order to keep this listenable. But I really hope we can talk to you in another year or two and see what you've decided your next step would be. I'm excited that we've reestablished our relationship, and I hope that I can get a front row seat and seeing where you're going to go next. Thank you very much for sharing.
I'll definitely keep you posted then.
Okay, great. And everyone, we've come to the end here of this latest episode of Scale Up Podcast. I just want to remind everybody that this is a serious hobby for me. I love doing it. I get a chance to meet with people like Rafi and get his experience and his insights, which are very, very different from insights we've heard from some other people in different contexts. So please, if you like Scale Up Podcasts, follow it, like it, give us reviews, repost it, and stay with us. So again, Rafi, Raphael, Afaedor, we're all going to be watching you.
Thank you, Dan. Thank you.